Hey traders, John Howell here, tradinginvestingforyou.com. In this video, this is just general advice. I don't know your personal situation. This is just a technique that you can use in your trading to help you become a much better trader. What I'm going to talk about in this video is how you can, one of the characteristics of a successful trader, and that is not having a complete 100% bias on a particular trade that they're in. Let me explain what I mean there. Is that if we are in a trade, like for example, I'll give you an example here. Right here, I actually entered on this particular stock here. Okay, I'm not in this right now. I'm not saying get in this. I'm not saying this is just an example of what happened just recently with me, and I want to show you an example of how the successful traders become successful while doing this. Okay, so let me show you what I mean here. What we're doing here is I entered on this day right here. Okay, I entered on that day right there, and I entered on a call option. I mean, I bought call options, and I had a directional play there. Okay, so with the call options, I was in this. So therefore my bias was bullish, right? Therefore I had everything going. I had my weekly charts, my other indicators, my price action reading, everything going for me. Okay, everything was sort of spot on with this particular trade. But here was the thing, is that all successful traders know that they don't focus on the reward first, they focus on the risk first. Okay, take care of the risk and the reward will take care of itself. Most people focus on the reward and forget about the risk. So what we're doing here is we're not having 100% bias, because we know the market can turn around, and we know, or I'm not sure if you know, but some of the most successful traders out there have a really low win-loss ratio. We're talking 30-40% win-loss ratio. How they actually make money is they learn how to cut their losses short. Okay, cut their losses short, but let their wins run on a little bit. I'll give you an example here. So this was the trade I was in, okay, and I was bullish. But knowing that, yes, this trade could turn around, and if there's signs of this thing turning around, then you need to hop out real quick and just be done with the trade. Okay, makes sense? Knowing that, now I got in on this trade right here. Okay, I got in there right there, and what I know is, as a successful trader, I know that I can't have a complete bias. I need to be unbiased about the market and reading the market for what it's telling me at that time. Not saying this is bullish and have every single different reason to stay into this trade and letting it go. So what happened here is the market was slowly moving up, and through that, my sort of price action reading, indicators, stuff like that, was telling me that this thing is struggling. Okay, as you can see here, the market ran up. This was the day I entered. The market ran up here, a little bit through here, sideways here, up here, and this day here, the market opened, came down, and closed through there. Okay, that day through there showed me that the buyers weren't showing strength through here. Okay, I was expecting the market to run up through here. Okay, I was expecting the market to run up through here, run back down through here, and then run back up. Right, run back up through here. But look what happened through here, and this is about price action reading. Okay, look what happened here. Market went sideways through here, right? So as the market went sideways through here, I was, or should I say, through this point through here, as I got in and the market went sideways, I knew that the buys weren't as strong as I would like them to be, and so I was keeping my blinkers on. And so therefore yesterday, not this day here, but this day here, when I saw that, I knew things were turning around, because it was just showing a lot of weakness. Now, you can't always get this right, but remember, it's all about cutting our losses short and letting our wins run. If the market is showing weakness at all, it's important to get out of that trade as quickly as possible if it's a directional play. Okay, so what I did is I got out on this day right here, and it was roughly for about a break even. Okay, because I got in on basically down here somewhere, and the market ran up and then came back down. I got in at roughly about a break even on this particular trade. Now, the very next day, this opened up and down here. Now, this is around about a 15% loss if I stayed into this trade, hoping and praying. Okay, so the whole point of this video is to say successful traders out there, they don't have a complete 100% bias on the market, and they look at the risk first and they let the reward take care of themselves. Okay, it's all about cutting the losses short. If you're in a long position, meaning you want the market to go up, have a complete unbiased, okay, have a complete unbiased view of the market. If the market looks like it's going to go up, yes, that's what you want to do, but don't be fooled and say, okay, well, I'm just going to stay in this and I'm going to look for every reason for this market to go up. No, if this market looks like it's going to start turning around, which, you know, we know every trade is not going to be a successful trade, so we need to have our alert, our blinkers on, so to speak, our headlights on, saying, okay, then if this thing starts to get signs of turning around in the opposite direction, I need to get out real quick to cut my losses short. Okay, and that's how you do it. Remember, if you do that and you look at, say, even 10 trades, okay, you look at all these different trades, if you could say, let's just say even 30% of them, let's call that 30% of them, cut them short. And let's just say, you know, the other 70% were a bit big as this. Let's say 70% of them were between 5 and 10% loss. The rest was between, say, a 10 and 25% loss. But then let's just say your 30% winners were like 80 to 100% winners. Makes sense? On a call option. That's how successful traders view the market. That's how, and that's the reason why I am a big believer on a couple of things. One, having simple analysis, as in understanding how to read the price action, and two, having a good unbiased view on the market. Don't ever be biased on the market. I don't care if you're in a position, meaning you want the market to go up or down or even just neutral. Okay, you've got to have an unbiased view of the market and be flexible with the market. The market can turn, and we need to have the ability to get out real quick and to be able to cut our losses short. So I hope this helps, guys. I just wanted to put this video out there for you to show you as an example. I got into this trade here and I got out and it was a really small loss, but I wanted to show you an example of cut your losses short, let your wins run a little bit, and be flexible with the market. Don't be biased on the market. John Howell here. Come on down to tradinginvestingforyou.com if you want to learn more about price action reading. Thanks, guys. Success can be yours if you go claim it. So step up, take massive action, and face your fears today.